Hello and welcome to ABG Investor Days. My name is Rebecca Järdrup and I work here at ABG as an analyst. And yesterday we took up coverage on Physitrack and therefore I am very glad that we have Henrik Molin, the CEO of Physitrack, with us here today. He is going to give us an overview of the company. And so Henrik, please go ahead with your presentation.
Well, good morning, and thank you for the introduction, Rebecca. We can flip this 2 steps ahead. I'll do a little introduction of the company, some of the things that we do, some of the high-level KPIs. I'll show you a little bit about the strategy and outlook for ourselves and the business in general, and then we can open up for a little bit of Q&A. I'll try to keep this tight within 15 minutes, so we have a few minutes for Q&A as well. So we can go to the next slide. Just by way of introduction to us, so here are some key points on who we are. We are a B2B provider. We're a SaaS provider. We operate in the care space, the healthcare space, and we mostly provide virtual services in the form of pure play SaaS, things that people buy subscriptions to. And we also provide care in the virtual space, and that's something also that we're introducing as a subscription model over time. I'll tell you a little bit more about that in the coming slides. Something that's been a core staple of us ever since we were founded is that we like high growth. We also like high profitability. That's the box there in the middle. At the top, if you look underneath there, you have some of those metrics displayed to you. So clocking in at CAGR of over 100% over the last few years, high degree of recurring revenue. Very, very important part here is the profitability, gives us financial robustness and an ability to take on risk in a way that's balanced with what we want for the business as the best of it. We operate in a multi-billion total addressable market, which I'm sure that you know because it's the virtual care space. Bottom left there, about the size of the business now, 120 million approximately Swedish krona. Run rate 11.5 million euros is the approximate size of it. And on the right side there, the little circle diagram, you can see that we have a pretty diversified book of business when you look at our global exposure. Let's switch to the next slide. Just a quick overview where we are operating globally. Red dot, people on the ground, and green dots where we actually have some sort of exposure. So we are a truly global play. We have customers on 4 continents. We have had patients of our customers in 187 countries. That's pretty much as global as you can get. So we have a very scalable technology that's also scalable at a high margin, which is a good combination. Let's go to the next slide. Just some high-level KPIs, just looking at the last fiscal year, so 152% top-line revenue growth. If you look at that on an organic level, it was 36%. So we have a combination between an M&A strategy and growing the business organically with that quite important margin-wise over 30%. Which is healthy. It can go even higher. Historically, we have clocked in at closer to 50% EBITDA margins, but this is a little bit seasonal depending on what we do on the M&A side of things. But you can expect us to clock in at high growth, both on an organic level, top line, with a high margin. Bottom left there, we have an active M&A agenda, so supplementing the great business that we already run in technology and in care with acquisitions. We have done 5 acquisitions since we launched the M&A program in 2020. So halfway through 2020, we started working on acquiring a competitor. We also used that to diversify into virtual care. And this is something that we actively work on. We say on average, an acquisition a quarter is what we're capable of in terms of the team. And so we're slightly ahead of that game, having announced an acquisition at the end of Jan and also at the end of Feb. And just some macro drivers, I'm sure that you're well aware, but we are experiencing some really nice macro tailwinds. I have a little bit more on that on the total addressable market, but you do see a rapid expansion of this market. You see an adoption of virtual care, which is quite important in this space. And the top right there, innovation, new offerings. I will be mentioning that a little bit as well. These are some screenshots from our deck that presents our virtual care SaaS product Access. Let's go to the next slide. digging into the business model a little bit. So on the left side here of that circle diagram, I describe our journey as a technology provider to the healthcare space, where we operate as the provider of key tools in a platform concept, where you have different ways of utilizing our technology. You can utilize just a little bit of it, and you can use that with your patients or employees if you're in occupational health. A small part of it, just using the library with 50,000 exercises and doing exercise prescription, would set you back about $6 to $12 a month, depending on where you are in the world, for you to use a single license with us with unlimited use per patient. So if you have a clinic of 100 healthcare providers in it, you'll be paying 100 times $6 to $12, depending on where you are. So we act as the technology provider there with the technology. I'll walk you through step by step how that comes together. So that's about 80-90% of the business today of that 11.5 million run rate. On the right side, this is our own virtual care business, where we specialize in occupational health and virtual first care provision using our own technology. But we are the healthcare provider, which means that we get paid per individual patient or per individual employee that's part of that journey that we enable with our technology. So the revenue mechanics are a little bit different there. The total addressable market is substantially bigger in that we get paid for the end user, i.e. the patient or the employee that's part of this journey. They're very complementary because they utilize pretty much the same technology. There are some modifications to the technology that we have done specifically to fit our role as a healthcare provider, but at the core of it, this is technology that's been used by tens of millions of patients all around the world in 15 languages. Let's go to the next slide and I'll show you how the technology actually comes together. So let's, the second drawing there at the top with my co-founder and I on a telehealth call. So the journey with Physitrack usually starts virtually, and a common use case is actually a patient getting online with a healthcare provider for an initial assessment, initial triage, which can be followed up with hands-on treatments, hands-on physiotherapy treatments, hands-on occupational health treatments, etc. This is a common way the healthcare provider works with the patient face-to-face, either virtually face-to-face or physically face-to-face. And after the treatment, they will usually give them some things to work on while at home. So a little bit of exercise homework, a bit of education about the symptoms that you're experiencing and how you can make those better. Those are prescribed to a patient to an app or a web page or a tablet. So that's on the right there with the iPhone, and also we have the tablet there at the bottom. So this is how you experience things with Physitrack on iOS, on Android, on web, and also on paper actually. And that's it's a very great way to prescribe and to give a patient this homework. In that app ecosystem, you can get reminders as a patient. You can go back and you can go on chat and do video calls with your healthcare provider, and everything that you do, and that's the picture all the way to the right there. Everything that you do, you can report back to your healthcare provider so they can keep track of your progress without having to ask you. So you can help your healthcare provider with data that they can slice and dice to understand what you're going through. And then your healthcare provider will be more informed as you go back to him as a patient and you continue your treatment. In a hospital setting or a big clinic, you can use that data, you can aggregate it, you can analyze it, and you can draw conclusions as to the health of your whole clinic or your whole hospital system using this Physidata tool. Now, top left, you have a little virtual man up there, a little avatar. We have patient onboarding technology that we sell via a custom app range. So we can tailor that patient experience in a custom app framework that we sell to our customers. So you can actually start communicating to your patient even before you start that first assessment process or that first appointment virtually via our intake module, which is called Physitrack AI. So our custom app range is quite a popular offering. It's virtually exploded over the last few quarters because as patients have gotten more savvy with technology and putting more pressure on the healthcare providers, it's something that's putting pressure on the healthcare providers to purchase more advanced technology, which they do from us in a lot of cases in the physiotherapy industry. But that's the overview of the ecosystem in a nutshell. Let's go to the next slide. Not going to dwell on this very much. You know this very well, that we are experiencing some very interesting macro trends here in the healthcare space when it comes to the attitude towards virtual care, and this is a market that's fast growing. These are even the old numbers before on the right side there with the graph, that's pre-pandemic, but you have some updated numbers there on the left. The pandemic was more or less just a trigger for the explosion of virtual care in our space. So physiotherapy specifically was perhaps a little bit slow to adopt things when it comes to digital, but this is very much something that's catching up, and we're right at the heart of that. Next slide, please. A little overview of our journey to date. I'm not going to stay too long on this, but we started from pretty much an idea. Me and my co-founder set up the business. We got a little bit of help from friends at Apple that took us on in their accelerator program in 2015. We found product market fit quite quickly with the help of them designing and architecturing our solution. We're still part of Apple's accelerator program, which is a fantastic tool for us to have. Their engineers and their designers are very much at our disposal for helping us evolve. But fast forward a few years with the pandemic, with the really big financial success we had there, we launched the M&A program, which enabled us to acquire a big competitor, PhysioTools, and also to launch into virtual care. You see a number of care brands there on the right. You have Physiotest, which is a Swedish company based in the south of Sweden. Urea Plus, which is the UK. Wellnow is in Germany. Now, Rebecca wrote a really nice piece of research here that explains how this comes together. But this is pretty much the same company, but with different brand names. Over time, we'll probably harmonize this, and there will be something that's Physitrack, the Physitrack care arm, which is probably 1 or 2 brand names. But it comes together nicely. 11.5 million run rate at the moment and growing. A couple of soundbites. That's next slide here on where we're taking this. And so we spoke a bit about the acquisition strategy and how we get along with that. There's some nicer things there in Rebecca's report, which I can recommend. On the organic side, very important to point that out. Number one, we are a platform with different components on it. We not only grow that in terms of number of users and make more money on as the ecosystem grows, we can also sell additional components into that ecosystem in the form of, you saw with the custom apps, you have the telehealth technology, you have the Physidata piece, which makes this a very interesting, quite stable, diversified play in terms of revenue streams. On the care side of this, although we like the M&A side of things, we're not a buy and hold type of business. We are a buy and build, buy and grow type of business. And so all our acquisitions have in common that they just form the start for us in a specific market or with a specific component in the SaaS product that will grow organically over time as we invest time and resources in an existing well-working business. So we provide rocket fuel for the businesses that we acquire, and we continue that strong organic growth in a very coherent and a very seamless, actually, way of working with these companies day to day. So buy and build indeed. A couple of things now on the next slide before we open up for Q&A. This is where we're going with our virtual care product. We are moving that into a subscription framework step by step. We are going more holistic with that. So historically, the physiotherapy industry has been more focused on solving problems that have occurred and making money off of appointments and making money off of consultations. In our world, we like the holistic view of that, where we can actually have a one-size-fits-all ecosystem that gives you access to a number of preventative initiatives, meaning preventing things from happening to you so that you don't need care. Now, so we are going big on assessments using Physiotest's IP for biometric testing via blood tests and virtual coaching and things like education exercises in a really slick app ecosystem illustrated there on the right, and also having an opening to speaking to people face to face, virtually or actually in a clinical setting, as is the case with Rehab Plus in the UK, if something happens to them throughout that journey. So going really full circle here in terms of going from assessment and prevention to rehabilitation in the same ecosystem on a subscription model, so fixed fee to cover all of these things in the ecosystem. Let's flip to the next slide there, Rebecca. And so what I was speaking about here, going into a tailored situation, personalization is a big thing in 2022 when it comes to virtual care. And so coming in, assessing companies and their needs, calibrating the technology for what they need to fit their employee base, because it is different depending on what company you work for and what health you are in. Then you launch this ecosystem, which is specific to that company. And as you have your employees being active inside of the ecosystem, you reassess. The user journey or the employee journey is there on the right. So what I spoke about, the assessment via biometric tests with Physiotests IP, rolled out more widely in the target markets where we are. And personalizing that journey, super important today. You can't just drop tech into any company and any employee base and expect them to adopt that unless it's been adjusted. You engage, and if something happens, you can triage, assess individuals and to actually get them care if something happens to them. And then you recalibrate and you keep personalizing this. And this is Access. There'll be more information about that in the market in the next few weeks as we launch that widely in Sweden, in Germany, and in the UK under those brands that we have acquired. Let's go to the next slide. All right, so just very quickly, just on the growth strategy here. First box there on the left, market growth dynamics. We are in a macro tailwind environment, and so with the growth of the total addressable market, we naturally grow on that because we are quite dominant in several geos, and so that's supporting us, and also the way that companies are on a micro level moving towards wellness and prevention and employee satisfaction using technology, very important there for the growth of the Access product. So we see a lot of things happening there, and of course legislation and the ability to come in and do things in the virtual care space is getting easier in a lot of markets because of the pandemic triggering that. Middle there, organic growth levers. So of course, with what we see here with the macro environment is very much favoring our core markets here, which are mostly Western markets. But in terms of the emerging markets, there's some very interesting things going on here for the next wave of digitization, and this is going to be quite favorable for us in terms of the growth of the technology SaaS piece. And so we have our system in 15 languages, but we are growing that in several other languages, including Japanese, South Korean. I think we have a Turkish version, and so on and so forth. So localization quite easy for us, quite inexpensive, and it's quite easy for us to launch locally. And so we very much have our eye on that next wave of digitization. Right side of this M&A program, as I said, on average, 4 acquisitions a year is about the pacing that we feel that that's prudent and healthy for this business at this point in time. All right, I just have one last slide, which is about our financial targets. So top line growth, you can expect us to be over 30%, and in terms of middle there, profit margins over time 40 to 45%, but seasonal variations depending on what we do on the M&A side. The right side there, we like dividends. I think over time, a successful, profitable, cash-generating company should have the ability to distribute dividends to its shareholders when the times are right for that. Probably in the next 2-3 years, this is something that we'll contemplate. For the time being, very busy on the M&A side with the cash buffer that we have, so we won't see distributions, but over time we are quite favorable to that idea. And that's it for me. I am happy to take any questions if there are any.
Thank you very much, Henrik, for your presentation. If we start with Physitrack is such a global company used pretty much all over the world. Are there any differences in the way the SaaS platform is used depending on where in the world it is used? And also, what are the challenges for Physitrack being in such a global environment?
Right. So on the first question there are local differences. And so the level of sophistication of healthcare providers and patients, they reflect the usage of the platform. So when you look at newer markets for us, printing is more important. And so patients there, they like to have their little paper printout. It might be that they have a very simple Android phone that might not have that much capability of downloading apps and things like that. So it's quite important that you give access to exercise programs without the constraints of an app store or a Google Play Store, which we do. So print and just the very basics of digital health, which is to log into a platform and printing out some stuff for your patients. We do that in some markets. And of course, you have the very sophisticated markets, which we see notably in the UK and the US, Canada, where they want more personalization, they want more custom apps, they want the specific look and feel of their app ecosystem with their patients, so that they can be more competitive. And so those are the two extremes that we have. So we adapt locally, on top of course, having a different languages and also different pricing. We look at stuff. Our Big Mac index is the price of a Netflix subscription. So we actually look at the local pricing for Netflix in different geos before we launch, just to make sure that you don't overprice or underprice. That's quite important. The big challenges, globally speaking, well, there is. When I spoke about those local nuances, there are some things that we see in emerging markets that we have to adjust to. Namely, we want to have a step in between the printing of exercises to the full-blown download of apps on the App Store. And so we are currently working on ways to distribute exercises and prescribe exercises without the need to log in, but by still creating, a digital experience. And so some of those things, when you look at patient data protection and so on, are a little bit challenging. So these are some things that we're working on right now, that's so that we can have a really, really nice uptick in the usage of the platform without having to compromise that. So yeah, there's some local nuances. Otherwise, it's for us, launching widely and rapidly at a low price point around the world is not really a challenge. I think we have way more markets that are open to launching than not. So it's almost the opposite. Like we have to slow down a little bit and not do too many markets at once. So that's what we are.
Thank you. And in our initiation report, we highlight the competitive landscape as one of the main risks. What kind of advantages does Physitrack has in this space?
If you look at the way that the platform is designed, we have some of the secret sauce with us, and so we didn't do this alone. We did this with the help of the world's largest non-petroleum company, which is Apple. So design, innovation, and having a technological edge for everything that you do, that's probably the number one thing. If you make a great product, then you will always have a leg up on the competition. And so historically, we always had the most rapidly innovative product out there, and it's something that we are not slowing down for at all. And in fact, we are due to go back into the Apple lab with some of our tech in the next few months, and that's really an edge there. Now, overall, I actually think competition is healthy, because a lot of competitors that are deeply funded, they can actually go in and develop markets, and they can develop some very expensive technology and fund that with their venture capital money and break down doors that we then can jump into. If you look at the search engine space, the last entrance into the market was Google. And so they weren't the first. And who remembers Yahoo and Alta Vista today when it comes to search? I don't think a lot of people do. So generally, I think competition is healthy, especially when you are transforming a market. And I do think that for markets like Germany, which is very, very big, but it is challenged from a technological perspective in that the broadband internet and the mobile internet, for example, is not at super top-notch quality. There are a lot of companies that are thinking about jumping onto the digital bandwagon, but aren't. Actually being in touch with people before us actually helps our journey, and it speeds us up when we come in with an offering that's technologically superior. So anyways, I'm pretty bullish on competition because it actually helps us in the end. So that's my view on that.
Yeah, thank you. And just lastly, the last acquisitions have been in preventative healthcare space. Can you just briefly give us a hint of why this is such an interesting area to grow in?
Well, I think the world, as we said, the macro is really supporting the digitization of healthcare, which is quite important. So you have the adoption and the sort of the buy-in into using digital health, both from employees and from normal consumers. That's changed quite rapidly in the last 2 years. It is a very hot space, and I think with the pandemic, employers have become more savvy when it comes to understanding the needs of its employees and seeing how things hang together. I think it's probably people spent a lot of time working from home, and then you start to understand the connection between emotional well-being and physical well-being and productivity and absences and things like that. So coming out of the pandemic, I think employees came out with a very different playbook, which really supports the use of technology for this space. Now, so there is a more of a holistic attitude from employers around this, which I think you can cater to with technology in a very, very big way. Now, the trick to be successful in that space is to understand that you need a combination between great technology and great people behind the technology, because consumers today, first of all, they need a personalized journey. They want something that fits them, and also they want pretty much avoid having too many places to go to get that holistic journey or to get help with those different things that they're looking at. So there's a challenge for a tech provider to actually collect everything in a technological framework that has humans in it, where everything fits in the same place. So that so it is a very exciting space. It's a very significant repositioning of our total addressable market, which we have been keen on for the last 4 or 5 years, because we've seen these trends come in the way that we've saw our own customers use our own technology. And I expect a lot of interesting things. And just on a final note on the KPI side of things, we've been incredibly successful with the acquisition of these companies. So track record-wise, we've seen. We don't actually disclose the exact growth of it, but our Swedish occupational health company, for example, has more or less doubled since we acquired them. Our Rehab Plus acquisition in the UK has increased with several dozen% since the acquisition. So that very much shows that the proof is in the pudding when it comes to the market growth and the evolution of this in the way our acquisitions have developed. So we're very, very bullish on what's going on in that space. So more to come on that front, for sure.
Thank you very much, Henrik, for the presentation and the Q&A, and thanks everyone for listening in. Bye-bye.
Thank you. Bye-bye.
Thank you.